Alright, what's up, everybody? It's me, Zeroh. I hope you guys are having an amazing day. Thank you for giving me some time out of your day to come and watch this video. Hopefully, I can provide some kind of value to you guys. And today, we're basically going to be talking about supply and demand zones and chart patterns and whether or not I think they're useful. I'm going to go ahead and spoil that and say, yes, I think they can definitely be useful. And we're going to go ahead and obviously elaborate into that. And the one thing I will say, though, is I think at the end of the day, trading is not going to be as simple as you draw zones on a chart and then there's some kind of like magic tool that tells you, or like now you're able to predict what's going to happen, right? Like that just doesn't exist in trading. And if that's what you're looking for, then no, zones are not going to be useful to you. Chart patterns are not going to be useful to you. Okay. But if we can understand that at the end of the day, these things are just a tool and they're a way for us to kind of make some sense out of a market where at the end of the day anything can happen because there's thousands and thousands of participants. And I would say that certain behavior does tend to repeat itself, but if a single participant that's big enough, that has enough influence, decides to do something, then that pattern is just going to get invalidated. Okay, if somebody wants us to break through the zone, if there's a big enough participant, they can make us blast right through that zone, right? Again, if you're looking at supply and demand zones as I draw this zone and then I think I can predict the market now, no, they're not reliable for that. Of course not. If trading was that easy, do you really think only like 1% of people would succeed at it? Of course not. We'd have a much higher success rate. But just at the end of the day, like I said, we can never predict what's going to happen in the future because that choice hasn't been made yet. Like I said, whoever the participants are going to be, they can decide to do whatever they want at any given moment. However, like I did say, certain patterns do tend to repeat themselves. Let's kind of explain why certain zones are created. Well, a zone first is created because there's a shift in balance. What do I mean by this? Let's look at this zone right here that I have marked out. Sellers were in control here, right? I think we can agree on that. Prices being pushed down, and then something happened at this point right here. What exactly happened? First, the balance was to the sell side, and then here suddenly enough buyers, or maybe it's the sellers ran out. We can't know for sure, right? Either sellers ran out or the number of buyers increased, but the balance shifted from sell side to buy side now. And where did it happen? In this zone. So that is important. That is important because at the end of the day, what is a supply zone or what is a demand zone? It's a key area in the chart where the balance has shifted in the past. So historically it's important areas in the chart, I would say. Okay, and because it's an important area from the past, it means that now that behavior tends to happen more times, right? Like we got that balance shifted here, that balance shifted here. I guess here you kind of invalidated that, where like it didn't necessarily happen. And that's where that thing comes in, where like it's like, yeah, at the end of the day, supply zones, it's not like a magic barrier where now price can magically never break down anymore. That's not going to happen. But again, it happened again where it became where the balance shifted. Previous demand zones tend to switch over to supply zones once you break down in the cover and retest, right? But then it happened again where it flipped to the other side now. Buyers were stepping in this zone. Buyers stepped in this zone, right? So that's all a supply and demand zone is. And how do you draw them? Well, that's the thing. Different people will have different supply and demand zones. They're going to draw them a little bit differently. Some zones are going to be more important than others. You can say there's like a zone here. You can say there's a zone here. So there's tons of areas where there could be potentially zones. And at the end of the day, I would say the best use case for these zones is not to tell you when and where you want to be buying and selling, because there's not one tool that's going to give you that when and where you want to be buying. But I think supply and demand zones can give you a hint of where you want to be buying and selling. And that's a key distinction there from when and where. All they tell you is where in the chart to pay attention. Why? Because it historically has been those areas in the chart where balance has shifted. So potentially it can happen again. And if you get enough signs pointing to that happening, you get that evidence start to build up, that's when you want to take action. And you want to take action in that zone because that's when you have the highest probability of being correct. Another thing that's important is that, and this is where the chart patterns kind of come in, is whenever you're entering a trade, what does that mean? It means that you have an idea of what can potentially happen, keyword potentially, and you're willing to put some risk behind that. So if we enter a long trade, what do we expect? We expect price to go up. If we're entering a short trade, what do we expect? We expect price to go down. Otherwise, we wouldn't take a trade. All right. And I think what chart patterns do is they give you a framework or they give you an idealized version of what a setup may look like. Keyword ideal. And if the current action that you're looking at is respecting that or looks as close as possible to that idealized version, that's important. That means something. That's where you can take advantage of stuff like chart patterns, supply and demand zones. If action is following along with what you think should happen, then you should be able to catch a winning trade out of that. And the way you kind of want to look at your trades and when you're analyzing the market is you want to have a certain A, B, C, D, E, F, G, H scenario played out in your head. What do I mean by that? So let's say we wanted to take a long on this chart. I have a long already, like a trade idea put out on the chart here. And but why would somebody decide to go long there? Here's an idea, okay? Historically, this was a demand zone, right? I think we can agree on that. So let's make it green or blue, whatever you want to call that. So was a demand zone here where the balance shifted. Here was kind of consolidation ranging in here, but here you were hitting sellers, balance shifted. Okay, it's just historically been a zone where typically the buyers tend to outweigh the sellers. Okay, we can agree on that. Cool. And this is where like supply and demand zones, this demand zone here can only tell you where you want to be interested. So where do we want to be interested? If we're potentially buyers somewhere near this zone, right? That's where we potentially want to be buyers. So that's where we want to be potentially buyers. When do we want to be potentially buyers? Or when you start getting some kind of evidence that your idea is correct. What's the first piece of evidence we got? This big move right here. I think everybody would agree that's pretty bullish action, right? And where is it happening? Right in this demand zone. That once you see this and because of where it's happening, that should be telling you, okay, there's a potential trade here. At least in my eyes, that's how I look at it, okay? And then we get a pullback, which is expected, right? Charts are not gonna move straight up, straight down. How do they move? Or in the most idealized way, or if they're moving in the most idealized manner, they're going to be forming low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. Is that always going to happen? No. Sometimes you're going to get choppy action where that's not going to really be the case, where you get low, high, lower, low, but then it turns bullish again. So for me, at least, this type of action is a lot harder to trade than when you get action like this, okay? But there's different strategies for different type of action. So there's not to say this is not tradable. This is definitely tradable. There's definitely enough range here where you can catch a lot of really good trades. But at least for the trade I'm talking about here, I think most people would agree that if you're looking for a long trade, this would be the most ideal type of action to see. Well, ideal would be obviously just straight up, but let's, if we're being realistic here, this type of action is what is going to be the most ideal. So pullbacks are okay. Just because you see this now, it doesn't mean, okay, well, the move up is finished, right? That's not what that means. And if you guys have been part of this, have you guys seen any of my previous videos before? You guys might know that I'm a big fan of the H pattern. So that's where the chart patterns come in. What is the H pattern? Let's see. Let me find a good example of an H pattern. Ideally is when you get high. You get a high low, lower high, and then you get that lower low. Okay, so why do I call it an H pattern? Because it looks like an H if you follow this along, right? It's like an H. And yeah, that's why it's called the H pattern. But what is the H pattern? It's a trend continuation pattern. So first there has to be a trend that's established. Once you get this high, low, lower high, lower low, so at this point, that's when the downtrend is now established, okay? So that there's been a flip in balance where buyers were in control, but now potentially sellers are getting in control. And what is the pattern? How does that pattern help you in your trading? Well, it provides an idealized version of what should happen. So like before we're seeing this action, we're like, okay, we're seeing highs come in, we're seeing a low come in, we're seeing a lower high come in. Cool. Once we get this lower low, all right, cool. You can say that's A, that's B, that's C. What would you want to see for your D, right? We would like to see some continuation on this low. Cool, you get that. And then you get a bounce. So A, B, C, D. Okay, that's still following along with our idealized version of what should happen, right? And then you get the next piece of evidence. Cool, it's still following along with your plan. Okay, and then somewhere within that A, B, C, D, you could potentially get an entry. For me personally, I like to be right side of the V, right? On the bounce. And then where would I typically put my stop loss? Right above this zone right here. And you guys are going to see how this trade is very similar to the current trade. And then as far as potential targets, that's another thing that supply and demand zones can be useful for. At the end of the day, I always like to give my trades, I always like to leave runners. So I might have taken off a portion of my trade here, but you guys can see that the action continued following our pattern here, our idealized pattern, because we get this high, low, lower high. This doesn't break here, so then this is where the pattern kind of starts being like, and this is why you constantly have to be reevaluating your trade as you get more information. But look at this, we never really broke above here. Our entry's all the way up here, so we're still fine. So we can keep holding. Then eventually we do get that break. Again, it didn't happen in the most ideal manner, but this is still still like aligned. Like it's not gonna, what ends up happening in reality is not gonna align exactly to what the idealized chart pattern looks like, right? It's just, if it's close enough, that's good. If it starts deviating too much, if you start getting too many of those red signs between A, B, C, D, E, that's where you want to start thinking about exiting the trade, or why I entered this trade. I'm getting evidence to go against that, and that probably means I should exit the trade, right? And then you make another low here, another lower high, another lower low. Do you see how that trend kind of continues? Another lower low, another lower high. You see? Okay. Trend continues for quite a while. And that's how I get into these type of trades where I'm able to catch 100+ point trades, because I set myself up early enough in the trend, and then as long as what I want to see happens close enough, right? There's no reason to exit out of that trade, and then just take profits along the way, and you're able to catch type moves like this, right? And are you always going to get a clean move like this? No, of course not. These moves are kind of rare, right? Now let's go back to current time right here. Same kind of pattern, just to the other side. So let's get rid of this now. Let's go to one higher time frame here. Okay. So similar type of action here where you have a low here. I guess you can say you have a high here, higher low, higher high, higher low, and then again, somewhere in this series of A, B, C, D, E, you want to get an entry. I always like to get my entries on the right side, okay? So somewhere here you would have entered, and you put your stop loss here. Why? And that's another thing that chart patterns are good for. Chart patterns provide that idealized version, and thus they're a good tool for finding or knowing where you want to put your stop loss. So why does it make sense to put our stop loss here? Well, because we expect price to move in A, B, C, D, E, F. That's why we're expecting this high to break here, and we want it to happen. We don't want price to do this, where we enter here and then price starts, because is that showing you strong action? No. Can this potentially happen and then this end up happening? Yeah, of course that could happen, but that's not ideal enough for us. And if it's not, like, the probability of that happening is less than the probability of this happening. So if this low ends up getting broken, we're gonna exit that trade, right? This would be a decent entry spot. This would be your stop loss. A decent target you can have is the next prominent zone, which is all the way up here, and that gives you a 3-to-1 risk reward right there. Cool. And then you can potentially leave runners, and this would be like the next main target I would see. Fresh all-time highs, right? But that's like how I set up my trades, and that's how I utilize supply and demand zones and chart patterns. Again, are supply and demand zones and chart patterns the end all be all? No, of course not. Can they be useful? Definitely. How can they be useful? At least the way I use them, supply and demand zones, I like to use them to tell me where I want to be paying attention. And then I use my own discretion and like stuff like price action, volume, like just stuff like this. Like, in my opinion, this is strong price action. Stuff like that to determine where or when I want to enter. As well as chart patterns to kind of give me that what I think or what an idealized version of A, B, C, D, E, F, G looks like. And if price is aligning enough with that, then I'll go ahead and actually execute that trade if I'm liking all the other variables, right? All right, quick update on our trade here. You guys can see we ended up breaking to fresh highs here. So look at this zone held. Where did it happen? Right at the zone, right? And then we broke it to fresh highs, came all the way up, and look where we started pivoting, right at this zone, right? So this is what makes zones useful. Like, again, it's not always going to be 100%. Nothing ever is going to be 100%. But where would we have expected sellers? Like, right, if we didn't know? Well, probably in this zone, we're going to run into some sellers, right? And look what happened. We ran into some sellers. Does that mean exit the trade? No. But what could you have used that, knowing that we could have anticipated sellers there? How could you have used that information to your benefit? You probably would have scaled some out of your position out here. It gives you more insight on how to manage your position. I'm still holding full size on this position. In hindsight, I probably should have taken a sell there, but it's okay. I'm okay with letting the trade return all the way back to break even if it has to. But also very key here, I didn't want to see price break below here, and guess what happened? Price held above this area, so I didn't end up exiting that position, even though the most ideal version would have been, we get this low here. I guess you can say high there, higher low, higher high, higher low. Didn't get a higher high, so that wasn't already ideal. And then we did slightly break this a little bit, so we got lower low. That wasn't ideal. But also very key, when you get let's say a lower low broken like this, it's very key to see the reaction on that. If you see that and you see an immediate flush, that's a lot of a bigger red sign than just slightly breaking it but not able to get any continuation on that break, right? Another thing that can happen is sometimes you can get a quick flush, but then it comes back up again. Not ideal, but sometimes that does happen, and I'm like, I'll be willing to still hold that trade. But that's why I kind of drew this zone here where it's like below, so we give it enough room to so it can break, and we can wait enough to see whether or not buyers will step in right away or not. So that's why I drew the zone down here, which would be like the line into the sand on the trade. But if we do break that lower low and then continue lower, like all the way down to here, that would be a pretty big red sign. And then you can say a new trend is starting where you have high, low, lower, high, lower, low, expect that lower high, and then continue even lower, right? And we wouldn't like to see that, right? And it looks like the selling is kind of starting to accelerate here, so that's obviously not a great sign. But again, I'm okay holding this trade for now, and this is definitely still going to be my line in the sand for now. So at least I walk away with like a couple points, right? At least. But all right, another update. Not too much time has passed, but we got a pretty heavy selling here. I'm not sure if there's some news at 5 a.m. today. There might have been some news that kind of fueled this move, but it looks like we yeah, selling definitely started accelerating there. Got like a 40-point drop. So obviously not ideal for our setup, and I got a lot of other things marked up on the chart here now, and I'll quickly kind of explain that. So obviously this is still lying in the sand. It still hasn't broken. I kind of want to see how this first bounce reacts. If this bounce is pretty weak and then we start kind of turning around again, I'll probably take the L on this trade and get stopped out for just above break even. So that's this trade. Let's get that out of the way now. And now, just how like we formed the idea for this trade, you can start forming the basis for a short side trade here. So why would we be interested in a short trade? Because this demand or this supply zone held. So that's your first, sign of potentially wanting to go short. Then you get that first piece of evidence, just like we got that first piece of evidence here, right? So this is our first piece of evidence. This right here, that's our first piece of evidence that bias might be switching to the bear side. So now what do we want to do? We want to wait for that first pullback. In this case, it would be a bounce, right? So we wait for that first bounce. This would be like a potential area where we bounce to. And then you set up your trade like this. Once you get that bounce and then you start kind of curling back to the downside, that's where you would take your entry, put your stop about the whatever high is created on that bounce, and then your first potential target would be back into this zone, and then that's how you would create a trade. So that's potential right now, but obviously I want to see this bounce a little bit more. Let's say half this move got bounced, we would see a bounce like to about this area. So that's what I'm looking for right now. But if we just start kind of curling here, that could also be potential, and then I would just exit out my long trade, since that's the trade we're in currently. But if I was in no trade right now currently, that's what I would be looking for. I would be looking for a little bit of a bigger bounce, and then as it starts curling, I would make my entry and then put my stop at whatever high was created. You could potentially do that now and get your entry here and put your stop there, but it's just ideally. And again, I just like to look for a little bit of a bigger bounce, but you could definitely go ahead and do that. There's just, in my opinion, a little bit of a higher probability of getting stopped out on that type of trade. But that also would make your risk reward probably better, because you could have a little bit of a tighter stop loss, less points. So it's all your preference, right? But again, it's just my preference to wait for a little bit of a bigger bounce. But yeah, if you were, like I said, and not in any kind of position, that's the type of trade I would be looking for right now. But since we're currently in a long position, we're just waiting to see if this zone holds or not, and probably gonna take an exit on that if we end up, like I said, breaking this low right here again. But yeah, that's basically all I got for you guys today. It looks like we might potentially come and break below this zone. That's not very ideal. If we start breaking price back below like this area, I'm probably gonna stop out. So that's what I'm looking for right now. Otherwise, I'm gonna let this trade work out and see if it can end up hitting our profit target. But yeah, that's what I had for you guys today. Hopefully you guys were able to take some kind of value out of it, and let's have a great weekend trading. Okay, see you guys later.